Instacart go IPOs today. It's supposed to have a range between $28 and $30, but it wind up going for $42. Now, here's the crazy part about this. In 2021, Instacart had a $39 billion valuation. But what happens is, it waits till this year and the valuation goes from $39 billion to $9 billion because you have a DoorDash, an Uber Eats. So that killed the valuation. Now, here's the crazy part. I told people this the other day. I said, listen, ARMS goes public at $56, shoots up to maybe $72. And I said, y'all, chill. Now it's back down to like $55. Like, those IPOs can be extremely dangerous, man. And I definitely want y'all to be mindful, just to watch out for those things, man. Those IPOs can be dangerous. My thing is always, let's go 4 to 6 quarters. Because what happens is, if it's a good company, it's a good company, and we still good in it, right? So if we go 4 to 6 quarters, that means that give us 1 year to 1 year and a half, and we've now got that much data. Now, because we have that much data, we can do the proper research. Because we can do the proper research, now we can put a better evaluation at it. But what I will say is this. ARM is profitable. Instacart is profitable. So it's not like you're getting one of these businesses that's not profitable already. They already are profitable businesses. Now, here's something I thought about today that really made sense. As I'm looking at Instacart, I realized something, dog. It's titled as a grocery store app, grocery store delivery app, but it's really an advertising app. Because watch this, Jose, watch this. If I can spend more money than Trader Joe's to have my products placed at the top of the app, it's a good chance that people gonna do what? Spend more money with me. So let's not look at it as a food delivery app. Let's look at Instacart as an advertising app that also delivers food. There's always like, but we needed to chat for that. I know my people would have went crazy just now. So what happens is one of the things I love to do is I love to look at businesses for what they are, right? Not what they appear to be. Right? Because there's always a level that we not seeing because we looking at it with the consumer eye instead of the investment CEO visionary eye. You know what I'm saying? So it's kind of like Facebook, right? Like, the more money I pay to get advertising on your app, the more you see my stuff. The more people see my stuff, the more said company gets a better opportunity to have a customer acquisition. Same thing with this. And once I realized that, I said, now let's go a little further, Dave. Now, the thing about this company is it goes on the market now with 22 million shares. But watch this, bro. These 6 companies, Sequoia, TCN, PepsiCo, Valiant, they buy 17 million shares. Now, they didn't statistically say it, but they went on record as saying, we're going to buy 17 million of these shares. That only leaves 5 million shares on the market. That only leaves 5 million shares on the market. So kind of be mindful of that. Let's go a little further, Dave. Here's the competitors: Uber, Grubhub, DoorDash, and Amazon. I forgot to do that. Amazon. So here's his competitors now, all which are on the stock market. But I believe that instead of investing in like a DoorDash or a Grubhub, I like Uber because it does multiple things outside of that. You got Uber Freight, you got Uber the driving thing, then you get Uber Eats. You're talking about a whole different type of business now. A whole different type of business model. And Uber Eats, I think Uber, if I'm not mistaken, they just dropped the subscription model. Or they on verge of dropping when they talked about it. So many rides a month, one price. That's crazy. So many rides a month, certain price, certain mileage. That's crazy. Let's go a little further, man.
What's good, trappers, man? It's your boy, the Wall Street Trapper. Right now, I want to invite you to an amazing experience full of value. That is my community, Trappers Anonymous. It's 100% the greatest fundamental investing community on the market. Listen, your portfolio should be a masterpiece. And the only way we get you there is if we help you to learn how to invest with confidence. Now listen, I get it. Like, you don't know a lot about stocks, or maybe you've heard people say how much money they lost in stocks, but I can guarantee you, one, because they weren't in the community, and two, they lack the information. Our goal in Trappers Anonymous is to help you, really to hold your hand on the journey to becoming a confident investor, learning how to navigate through the different events that the stock market goes through, to take you from panic to encouragement. There's no better time than now. This is an opportunity only for those who are willing to be on the journey. So listen, man, click the link below. Come join me in Trappers Anonymous, man. I will see you in one of our many classes, whether it's Moat Monday, whether it's the 2-hour class we do on Sunday, or whether it's just a book club. Everything is geared toward making you a better investor so you can triple your net worth and turn your last name to an asset. It's your boy, Wall Street Trapper. See you in the trap.
All right, more money, no problems, right? These companies right here have the highest free cash flow conversion in the last quarter. We got Visa, we got Google, we got Visa, Palo Alto, Alibaba, Qualcomm, AVGO at 93% conversion rate. We got Meta, we got Apple, we got Yelp, we got Google, we got Nvidia. So they've been able to convert that free cash flow into, like, you want a company that's good at converting that money. And I always say this, a company with no debt and a lot of free cash flow can't go out of business. All right, so watch this. Because I mentioned Nvidia, I want us to understand the whole landscape of looking at the semiconductor field. I'm gonna be real with you. The chip industry is a heavy industry. It is the future. So I want you to look how you can play it. One, you can go with the semiconductor design software. This is a company that I like. I own, Cadence Synopsys. Great company. They in the field by themselves. Number two, you can go to semiconductor manufacturing equipment. You got ASML, Lam Research, Applied Material. You got 4 companies in there. You can go with semiconductor consumers. These are the companies that consume the semiconductors. You got cloud computing, cloud data centers, vehicles, industrials, and electronics. So we breaking out a whole cloud infrastructure for y'all right quick, right? And then you got design. You got AMD, Nvidia, Broadcom, Qualcomm. These people design the semiconductors. There's a difference between the design software and then the design semiconductors. And 4, you got the manufacturers. You got TSMC, Intel, Micron, Samsung. So these are the 5 ways that you can play the semiconductor industry. And I know a lot of people gonna say, yo, we just rocking with Nvidia. A lot of people gonna say, yo, we rocking with Nvidia out the gate. Well, there's other ways to play it. And that's all I want us to see, that there's other ways to play this game. Let's go a little further. I wanna look at something right now. So y'all know 2024 gonna be a hell of a year, because now we talking presidential election. I like to say this too, you can tell how the economy or the country feels about a president by if they re-elect him or not. I think that's your grade, that's your presidential grade if you get re-elected. Now here's the crazy part about it. When we look at a term itself as a president, right? So we can see, look at this. Ronald Reagan gave us 30%, 67%, back to back. Ronald Reagan, Reaganomics, cocaine cowboys, flooded the market. George Bush, he went to war. Guess what? Market still felt good about it. But look at this. Clinton got us paid. 79, 70. And we just talking about the money that he put in, you know what I'm saying? Bruh, think about this. What Clinton did when he was in office? Putting in jail. They gonna ban us, we say that, B. But watch this though. Clinton gave birth to a new revenue stream, mass incarceration, prison enterprise. But watch this. The reason why the money did so good when Clinton was in office is because so many of those companies also invested in that prison enterprise. So many of those companies did so well, and we talking about just returning money to the United States on the increase. You know what I'm saying? So many of those companies, you feel me? So many of these companies did so well when Clinton was in office because prison enterprise. So watch this. George Bush, what'd he do? We went to war. No good. No good. We don't like it. We don't want no parts of that. Barack comes in. What Barack do? Barack go kill. Go get, you feel me? Barack implement a couple little policies. Then we get Trump in office, right? So Trump comes in office, whether you like him or not, whether I like him or not, he made some money for the people. And then you got Joe. Joe at 15%, the lowest of them all outside of Bush. I will say that Joe got a lot going on while he in office. You got a Russian-Ukraine war. You coming off you inherit the economy after the market has inherited $8 trillion in it. I'm not taking up for him. I'm just saying, you know what I'm saying? I will say, Joe has inherited an economy that was fluffed with $8 trillion, so that has to leave the economy. And then he has a Russia-Ukraine war he has to mitigate. Then he got China that's on his heels. Now, can he do some things better? I don't know. I never ran a country before. I'm on the outside looking in. I'm speaking from the poor people's perspective. I've never ran a country before. What I will say is, as a people, you always feel like the government could be doing better by us. And I think some things could be done better. You know what I'm saying? But I also know there's a lot more than what meets the eye when it comes to running a country. But I don't like some of the stuff he be saying. Like, you not vote if you ain't black if you don't vote this. We gonna put crack pipes back in the neighborhood. Like, bro, you tripping. So that's my thoughts on that. Let's go.